Hello and welcome back to the channel. So you have saved some money and now you want your money to work for you. You have heard the term investing, and investing is basically allocating your money so that it can return you more in the long run. But as a beginner, it's very overwhelming because there are terms like bear versus bull market, S&P 500, index fund, mutual fund, limit order, and the list goes on and on. I am of the firm belief that investing should not be so much harder, and if you stay till the end of this video, I will show you how you can invest your money, why you should be investing your money, and at the end of this video, I will show you a live demonstration where I will invest $100 in S&P 500. So without further ado, let's get to the video. So first question, why you should be investing your money is most of the people are keeping their money either in saving account or either in worst cases in current account where there's not even any interest rate. Let's say you have a saving account in one of the big bank, let's say Chase or Deutsche Bank, and the return you get on those is around 0.1% to 0.5%. Let's say hypothetically you have a $1 million and $1 million on 0.1% return would be $1,000, and let's say if it's 1%, you're going to get $1,000 return at the end of the year, which is very low as compared to 1 million versus $1,000. Now let's suppose that in stock market, which has a return of around 8 to 10%, if you have $1 million investment with the 10% return, you're going to get $100,000, which is a very huge order difference as compared to $100,000. On the other hand, let's say if you can get even 5% return on your 1 million investment, at the end of year you will have a $50,000 return of the market. So this is a very huge difference as compared to what you can get from saving accounts as compared to investing in stock market. The second reason you should be investing is the compound effect. As a beginner, this term is very overwhelming and it's a bit confusing that how this will work. And let me give you an example. So for example, if you have $1,000 and you get a 10% return, at the end of 1 year, you're going to have $1,100. Now you start the next year, if you get 10% on $1,100, you will end up with year 2 with $1,210. Now pretend that this pattern continues for another 20 years, your money starts to earn money on the previous balance every single year. So at the end of year 20, let's say you're going to have $6,727. So just by putting $100, you can see that in next 20 years, your money is going to be 7 times what you have invested 20 years ago. So this is the magic of compounding. And let's say in the next 20 years, you're probably going to invest not only $1,000, but if you're investing, hopefully you can invest more and more every month and every year, and the magic of the compound will happen, and you can see that your money will be more than 7 to 20 times in the long run. Another important reason to invest is the inflation. You have seen in the news and you have experienced that the prices of everything, consumer goods, tickets, everything you can buy have gone more than 10 to 20%. In some worst cases, for example, for eggs, butters, the prices have gone doubled. And this is the reason that you need to invest, because if your money is just staying in the bank account, you need to make more money to buy this stuff. Otherwise, your money is losing its worth in bank account. So as currently the inflation, for example, in USA is around 6 to 8%, and in some other countries, for example, in Pakistan, it's around 19%, whereas in Turkey, it's around 85%. So this is the worst case scenario, that if your money is only in the bank account and you're not making a return of, let's say, more than 6 to 10%, you're losing your money just by putting even in the bank account. So this is one of the most important reason, although the US or the rest of the world is trying to recover from this inflation, and they're trying to come back to a level of, let's say, back to 2018 to 19, where in USA it was around 2%, but it's very hard that this goal would be achievable, let's say, in 2023. So this is a very important reason that because of inflation, you should be investing your money. Otherwise, this is losing worth if it's just staying in the current account and also in saving account. These are all the reasons you should be investing. And now let's get to how actually we can invest in. Before you get into how we can invest, you need to know that there are a lot of variety we can invest in. For example, there are individual stock, for example, Apple, Tesla, and Microsoft, and there are many other companies you can invest individually. But as a beginner, picking up individual stock is very risky, and the best way to invest as a beginner is to invest your money in an index fund. So what is an index fund? Index fund is actually a bunch of different stock into one bucket. So if you put your money in an index fund, that cash is then used to invest into companies that make up the particular index, which gives you a more diverse portfolio than if you're buying individual stock. There are different types of index fund in different stocks market. S&P 500 is one of the most famous index fund, which tracks the top 500 companies in the US. The second on the top list is NASDAQ 100, which tracks the top 100 companies in the US. In United Kingdom, and they have FTSE 100 that tracks the top 100 companies in the United Kingdom. So as a beginner, it's very risky and to pick up only individual stock, and the chances are very high that you're going to make a wrong decision. And so it's always better as a beginner just to invest your money into those index fund and just keep putting your money month by month. And once you think that you have enough knowledge and you can let's say research companies individually, then it would be a better idea to, let's say, put your money in individual stock. Until that, it would be better you can just put your money in index fund. Let me give you an example of S&P 500, which is known as like the stock market of US. And what would be the case, let's say if you have put $1,000 in 1983. This is the S&P 500 chart starting from 1983 and going till 2023. So as you can see if you have to put $1,000 in 1983 in S&P 500 only, and you can see that your money could have gone 26 times. So your $1,000 investment now would be worth of $26,000. And this is what we have discussed already. The average return of S&P 500 is around 8 to 10%, and the magic of compound effects happen all the years. And you can see that there are times, if you have invested, for example, in 2000 because of dot bubble, the stock market went down for almost 3 years. And if you have invested and you have taken your money out for somewhere, you could have lost your money. But this is the risk you have to take, and you always have to take, and you always have to think as a long-term investment. But as you can see, after a few years, the market went up again, and you could have gained more on your original investment. Similar thing happened also in 2008 crisis, and this was one of the biggest financial crises. And as you can see, people also lost a lot of money. And the best thing to do is always stay in the market rather timing the market. As a beginner, you have also heard a lot about the ticker symbol. And as I said, S&P 500 contains top 500 companies of the US, and all different companies have different ticker symbol. Here is an example, and as you can see, the Apple has a ticker symbol of AAPL, Microsoft has MSFT, and the list goes on and on. So for example, in this S&P 500, when you put your $100 in this index fund, your money is going to be distributed according to their weightage. So for example, Apple has a weightage of around 6.7%. So if you are going to invest your $100, $6.7 would be investing in Apple, $5.7 would be gone to Microsoft, and $2.5 into Amazon. And as according to their weight, you can see there are 500 companies, and these are companies which many people may be unknown of these companies. For example, if you go down, there might be companies, for example, Masco Corporation, Match Group, which are like very, very unknown companies to normal people. But these are the companies are the top 500 companies on the S&P 500 or the US stock market. And when you invest your money is diversified in all those companies. So your money is carrying a very, very low risk as compared if you are investing into an individual stock. So as a beginner, it's always a good idea to only invest in those index funds. Another very important question as a beginner, people are always worried, is it possible that the stock market is going to zero? It is very unlikely, but there's always a chance, let's say a 0.0001%. And you never say never to anything. But let's assume that the stock market has gone to zero, which is very, very unlikely. For example, the total net worth of the stock market in the whole world is around $95 trillion. US itself has 56% share in this US stock market, which is, let's say, around $50 trillion. And if the stock market has gone to zero, so that means something has horrible happened to this earth, and money is not very important at that particular time, and there are more important things at that particular time. But still, I would never say never, but the chances of going stock market to zero is like 0.00001%. But as I said, the investing in stock market, it always carries a risk, and this might be one of it. Hopefully now you have enough knowledge about S&P 500 index fund and stock market, and now you want to invest your money. There are different brokerage apps nowadays, and you don't have to call Leonardo DiCaprio like in 1980s. Once you call them, and they will buy on your behalf. Nowadays you have the ability to invest in stock market in within a second, and depending upon your region, and there are different options. For example, in US they have Fidelity, Schwab, Robinhood, and Webull are a very famous brokerage app, whereas in European countries and some Asian countries you have the availability to trade using Trading 212, etoro, and Trade Republic. These are some of the very famous options available in Europe and Asia. But personally, I'm using etoro from past more than 2.5 years. I find the interface of this platform is very nice, it's very usable, and the fee on this platform is also not ridiculously high. So if you're interested in etoro, I have also attached a link under the description. Please use that link to download and start trading. Another important question as a beginner is when you can start investing. There is no certain age, and I would have, first of all, if you're in the beginning stage, there are 3 at least points you should be ticking out before you invest. The first and most important point is you should pay any debt if you have. For example, if you have any debt, you're probably going to pay 15 to 20% interest on that debt. And if you're going to invest that money into stock market, the probability that is you're going to make 8 to 10% by, let's say, investing into those index fund. But at the end of the day, you probably have to pay 10% extra on your debt. So first of all, if you have any debt, please pay those high interest debt, and then later you can start investing. The second one before you invest in stock market is establishing some emergency fund, and that is very, very important. Personally, I would suggest at least 3 to 4 month emergency fund before you start investing into the stock market. The third and last point, I would suggest you please invest only what you can afford to lose. The stock market sometimes could behave very differently, and you cannot put your all the saving into the stock market. So only put that money which you can afford to lose. These are all 3 points I would ask you to check before you can start investing into the stock market. Alright, so in the last part of this video, I'm going to use etoro platform to invest $100 in S&P 500. For this part, I have changed my clock because the last part I showed was on the weekend, and today I'm making this part on Wednesday where the markets are open. Before further ado, let's head to the etoro platform. So on etoro platform, I have searched for S&P 500, and in order to invest, you click on invest, and here you can see that I'm going to enter my $100. On this case, I'm going to use 10x, and because the minimum amount here is $1,000, so that's why I'm going to choose $100 on 10x. Leverage is basically you borrow money, because here on etoro platform we have CFD trades, and if you want to learn more about leverage, I have already made a video about this. Please click on the link under the description or on the pop-in. So here I'm going to just trade, and if I click open trade, and you will see that I have opened an order of position, and you can see now I have open $100 position, and this 0.10% is the trading fee what etoro gets. And as you can see now that S&P 500 is increasing, our profit is also increasing. That's pretty much it. And so in this video, I hopefully after watching this you have gained, let's say, a much better overview on how you can start and why actually you need to start investing as soon as possible. So if you stay till the end, and I hope you have learned something new, so please don't forget to like this video and subscribe to the channel, would be highly appreciable. My name is Adnan, and I will see you in the next one.